Good day everyone, this is your European Open briefing for Monday, September 5th, 2016. My name is Michael Florentiades and I'm the Chief Economist here at XM.com. These are the key points you should know about today. The US dollar was resilient to the mediocre employment report. The yen is stronger after Kuroda reiterated the Bank of Japan position for the possibility of more stimulus. Strong corporate profits in Australia boosted the Aussie ahead of the RBA meeting. And we have, looking ahead, UK services PMI, Eurozone Centix investor sentiment, and retail sales for the Eurozone. And a reminder that it's Labor Day holiday in the United States, so no data from there. On to the non-farm payrolls and the US employment report. So it showed an increase of 150,000 jobs. That was from a revised higher 270 or so thousand of the previous month. Unemployment stayed the same at 4.9% instead of dropping to 4.8%. Wage growth also decelerated, however, to 0.1% month on month from 0.3% month on month the previous month. So how much does the report change the big picture though? So this is the question we are asking. At the end of the day, probably not that much. You see the dollar index here, there was a knee-jerk reaction, a drop of around 0.4%, but then you see a rebound later on, and more or less at the same levels following better reflection, let's say. So not much changed the US dollar index as a result of the non-farm payrolls. And this is all, we can also see this in the 2-year treasury note. Why? Because this is a reflection of the market's expectations for interest rates for the next 2 years. So what happened? Right after the report, we had a dip of around 5 basis points from 0.79% to almost 0.74%, but then it rebounded back to around 0.79%. So the market's outlook for the next 2 years is not much changed. So you say, what was a bit of weaker report? Does it not have any influence on what's going on? That's a fair question. But I would remind you that September now is a bit less likely for hiking rates, but keep in mind that a September hike was not the main scenario for the market anyway. So as September becoming a bit less likely is not really much news, because the market was pricing in around 25% chance of it happening, so a bit less, a bit more doesn't really change a lot of things, it seems. Now, it's interesting to note that dollar yen had quite significant volatility. It traded around to as low as 102.8, as high as 104.3 in the aftermath of the report. And we had some comments from the Bank of Japan Governor, Haruhiko Kuroda. And his latest comments was that the Bank of Japan is ready to act, was more of a repeat of previous statements. Of course, Kuroda did say that the evaluation of the bank's easing policy next meeting is unlikely to lead to less easing. So it doesn't mean that the evaluation is going to lead to less stimulus. The yen rebounded a bit, but it's also an indication of the US dollar inability to push higher. Well, maybe market participants were expecting for Kuroda to give more hints, to drop more hints of stimulus, but he didn't do it. And also we have this indication that the dollar is it's rather difficult for the dollar to climb above and stay above 104 dollar yen at least. Now, for the Aussie, we had a very weak AIG services index dipping to 45 from 53.9. However, we had strong company profits here, and this has boosted optimism for GDP, second quarter GDP. The Aussie climbed to around 0.76 versus the US dollar. We also had the Caixin services PMI in China coming in better at 52.1 compared to 51.7, and we have the market services PMI from the UK should rebound from the Brexit shock in August to come in better around the 50 expansion contraction line. And keep in mind that we have had upside surprises from sentiment surveys in the UK, which have boosted sterling. So it will be interesting to see for the huge UK services sector whether we have the same thing. Now, the Eurozone Centix investor sentiment expected to rebound to 5 from 4.2. Also Eurozone retail sales, and there we don't have any other data for today. It will we have a Labor Day holiday in the US and Canada. This will likely result in very quiet, thinly traded US session, and the action will be tomorrow, especially with the Reserve Bank of Australia expected to hold rates according to economists. Although one more cut until the end of the year is likely. It's also the last meeting of the current RBA governor, Glenn Stevens, so that will be his last meeting before the deputy governor will take his place. He still has another month, but it will be his last monetary policy meeting. We also have German industrial orders tomorrow, as well as Eurozone GDP and ISM non-manufacturing from the United States. So that's all from me today. Thank you very much for watching and have a great day.